We are now seeing Prime Minister May calling this a legally binding change. President Juncker saying that these are assurances and guarantees. Has anything changed from their talks today that might change the outcome of tomorrow's vote in the UK Parliament?
I think it's really hard to tell. You know, we're coming down to the wire right now. Theresa May has used this deadline to bolster what was essentially a very weak hand she was dealt when she became prime minister. There are no good solutions to all of this. The country is very divided. I think, with all due respect to our British friends right now, you look at them on TV giving interviews and they look like exhausted wrestlers just wanting this thing to be done. I think right now it looks as if there will be an extension because it's very hard to look through how all of the arrangements can be put in place before the end of the month. It seems like she has been able to bring something back to London from Brussels, which may give enough cover to enough people to rally around her vision of exit.
Yeah, our previous guest, Jacob Kierkegaard, calling this essentially a formulated political fig leaf, if you will, that potentially could give her a bit more leverage. But I'm wondering from the European side, we've heard once again the same sentiment from Jean-Claude Juncker saying this is the best deal that you're going to get. This is the only deal. There'll be no more negotiating after this. The problem is we've heard this before, haven't we? I mean, how much leverage does the UK have over Europe, given that we know that trade flows and economic growth is slowing in Europe?
Well, I think that's what's increasingly dawning on the British political leadership right now, is that their leverage is quite limited and rapidly fading. The European Union, I think, has carved for itself a clear path to exit for the UK. If the UK doesn't want to accept it on those terms, then it's very hard for them to renegotiate something that, in fact, doesn't exist, in the sense that having access to all of the European Union's benefits without being a full member is just not something that is easy to negotiate in political or economic nature. So I think, Jacob Kierkegaard is one of the great scholars who follows this day to day and knows the ins and outs of how this will play out. But I think right now it appears as if there will be enough backing for an extension of the deal. I think that's probably what I would expect going forward, some way to extend the deadline beyond the end of the month. It doesn't feel to me, we will see if the fig leaf that she brings back from Brussels is enough to bring people around. I think the broader issue is in any case, with an extension for companies doing business in Britain, for companies looking to invest in Britain, the uncertainty is likely to continue because we still don't know what the final outcome is going to look like beyond the end of 2020.
Yeah, that's it, isn't it? I mean, it might be enough, as you can see, to see a short-term rally in the pound and maybe some optimism in trading other British assets. But is a withdrawal deal even going to be enough for the restoration of investor sentiment in the medium term, let alone the longer term for foreign investors?
I think the uncertainty is going to persist. First of all, if you are a company that has been bracing for the end of March and there is a delay, then you have to continue to brace. You have put a lot of your working cash flow to work on creating reserves, buying ahead supplies, bank liquidity. You saw the Bank of England requiring its banks to boost reserves and boost liquidity in case of a sudden shock to the system. So that moment of bracing for disaster is going to have to continue at least for several more months. And then in terms of understanding what the relationship, the trading relationship, the regulatory relationship is going to be between the two entities, the EU and the UK, that is going to remain unclear, I think, for a long time. If you take a much longer view, if you look out 5 years or 10 years, I think it's easier to say the UK's relationship with the EU will be more or less what it has been, just more complicated and maybe a little more expensive. There will be more paperwork to file when you're moving things across borders. There will be more rules to follow when you're trying to observe two regulatory masters. I think for a business point of view, it's going to be a more complicated world. But the general flow of goods and services across those two borders is likely to be more or less the same that it is now.
Chris, let's talk about the broader economy, because this really couldn't have come at a worse time. We have seen European downgrades last week, not to mention U.S. jobs data really missing estimates, Chinese trade data also not looking good. So it seems the global economy is slowing down. However, how problematic is the pace of the slowdown at the moment?
Well, as you say, it's not news that there has been a slowdown in the global growth, and we got 3 reminders of that last week from the ECB's downgrades of European growth, a lower growth target out of China, and of course, retail sales and the jobs numbers coming from the U.S. I think what is more important from an investor's point of view, if you look forward, you have policymakers, some deliberately, some in spite of themselves, offering support for a slowing economy. So you have monetary policy that's supportive in China, in the U.S. now, with the Fed on hold, in Europe, and of course in Japan. You have fiscal policy that is, if not supportive, certainly not in a consolidation mode. So I think you have some scope for the global economy to react to those government measures to support growth, or at least to cushion and slow the deceleration. So I don't think it's easy to make a case that we're headed for recession right now, because I think you've got governments and policymakers pushing in the other direction.
Fed Chair Jerome Powell seems to be a little bit more optimistic about the U.S. economy as well, especially when you put it into the bigger context of things. Chris, listen to what he said over the weekend.
I think growth this year will be slower than last year. Last year was the highest growth that we've experienced since the financial crisis, really in more than 10 years. This year, I expect that growth will continue to be positive and continue to be at a healthy rate.
In that regard, should we be looking at the global economy, especially with the U.S. economy still looking solid, as the glass being half full?
Well, you know, they say never fight the Fed, and I'm not one to disagree with Jay Powell. I think the outlook for the U.S. continues to be good. If you look at the jobs numbers, you look at wage growth, you look at corporate profits, you look at corporate valuations. I think the outlook for an investor in the United States is still pretty good, which should underpin confidence in the growth path for the rest of the world. I think the other moving part in all of this is, of course, China, and when we'll see a result from the moves from Chinese authorities to boost their slowing economy. And you see some early signs of it now. It's still a little tentative right now. The export numbers earlier this year, February and January, were very bad, but I think that has to be explained from some seasonal and some other issues. More important is that you have a government with tools, with resources to respond to slowing growth, which I think will play through not only to the Chinese economy, but a lot of the slowdown in Europe is related to slowing demand from China. Germany is, of course, very dependent on its capital goods exports to China. And if China, demand from China stabilizes, I think we should see that play through to Europe, to Japan, to Korea, to other parts of the world. So if you believe that the outlook in the U.S. is relatively solid and that the Chinese authorities are reacting, I think we're still looking at a pretty good year in 2019.
Christopher, are those who are feeling sanguine about a shorter-term or even medium-term trade deal with China ignoring the fact that any such deal could possibly be pretty ephemeral, if you will, right? Given that we know that the longer-term relationship between Washington and Beijing is going to be one of tension, of strategic competition.
I think anybody who's looked at the U.S.-China relationship over the last couple of years understands that any deal at all has to be ephemeral, or at least has to be a temporary truce, if not more than that. I think the differences, as you point out, between the U.S. economy and the Chinese economy are real. It will take a long time to come to some sort of understanding between both sides. But I think the other part of that is that the market has been focused on tariffs, not just the current tariffs, but the threat of new tariffs coming out of the United States. I think the United States administration understands that that has been, that it's not in their interests for that to expand and to continue. I think the Chinese authorities are eager to get this story off of the headlines before the U.S. Presidential election kicks off, because that will certainly be at least one part of the debate going on in the United States. So the body language, the mood music right now is that we're headed to some sort of temporary agreement. Both sides will shake hands and agree that they've made some progress on some issues. And that, I think, should give the market some relief that the tariffs, if the current tariffs aren't repealed, at least no new tariffs will come on going forward. Sure. And of course, as you say, over the longer term, over the next few years, we're still going to be talking to China. Washington and Beijing will still be talking to each other about all of these issues government subsidies, intellectual property protection, and all the differences that separate the two countries.